In the SPX channel, SPX game plan, we try to walk through a process. It doesn't have to be the process, right? It's a process. A lot of folks come here to GE and they don't really have a methodology. So one of the things we like to do is just apply what I would call a fairly simple methodology. So on the screen right now is what we call the MTM. This is using a slightly different tick. Don't get wrapped around the axle. Doesn't matter. This one is what we call the USC, or the US composite. It's kind of think of a wide net, or the kitchen sink of everything. And it uses all of the regional exchanges. And so why that can be useful is that it gives you kind of an early warning system of what's going on. And if we're trying to look for bottoms, this would be one of the nets that I would want to kind of have out there and looking around. So just to get everyone oriented, across the top, 52-week new high, 52-week new high, new lows. This thing underneath here that's in this bolded cyan line is the filtered cumulative tick. We'll talk a little bit about that. You can see it resets every day right here. So a new value at the beginning of every day. This one here is the unfiltered cumulative tick. It too resets every day. And not to be confused with this bolded white line down here, which is also the CT. It's actually the same thing that you see right here. It's just stitched together. It's continuous. So effectively what this is telling us, you can see all week was pretty dire, right? So we've got red over green. So new 52-week new lows outpacing the new highs. And that's really, really important. So the market breadth, even though this is a lagging indicator in general, the market breadth has been pretty poor to the downside. Nothing new to anybody, but when you look at this, you should be able to go, bam, you should be able to look at it and see that. Friday, a little bit better, right? They're trading very close to each other. The yellow line is the difference. And even though it's negative, you can see, we're getting much closer in magnitude, right? So that's kind of important. So takeaway, 52-week new highs, new lows. We're seeing improvement. We're not there yet. Okay. Now it's a lagging indicator. So we're setting up in the right direction. I wouldn't say this is the make or break to go forward, but it's moving in the right direction. So that's a data point. This thing here in the bolded cyan line, we call this the FCT, or the filter cumulative tick. This is important. This, we believe, represents large players, the larger boys and girls who are out there, and they present orders faster than can be cleared by the market, right? So think high frequency trading, algos, things that are big iceberg orders that are broken into little chunks, and they present themselves to the exchanges, all the exchanges in this case, because this is the USC, and they can't be cleared. And if you're trying to sell and they persist, we ramp downward. And if you're trying to buy and they persist longer than each minute, and this is a minute chart, by the way, then we accumulate. So something doesn't look like the others here. And the thing that doesn't look like the others is that we have pretty clear buying that was occurring on Friday. So that's pretty cool. That's a good thing. And that's very different than the behaviors that we're seeing here. So we'll chalk that up. So we got 52-week new lows that are coming down. Not really seeing the new highs come up yet, but we're also seeing the FCT now start to show day one of looking stronger. The CT, the shape of the CT is a lot like what you're seeing in the FCT. Remember, this resets every day. Just the takeaway here is that there are some days where there's no panic, no urgency in the market. And sometimes the CT looks differently. It looks pretty close to the same. So this is basically, there was urgency and it was onto the buying side. So there was clearly some things going on for the day. All right, so just cutting to the chase here at the bottom, you can see that day over day, we were ending lower. And we pick up because it's the cumulative CT that is here. We finally got to Friday morning, and at the open, it was off to the races. And Taylor had a video about some trades that he did on Friday. And sure enough, this isn't the most powerful signal. We actually like to see kind of these midday reversals if we can get them. But we don't choose what we get to take and not take here. And clearly the market was in this mood on Friday to start off. And so we had some things go on here that are important. The first thing is that so we have this ribbon. This is a longer term thing. This is 1 to 3 weeks in length, and it's been in a downtrend for some time. All right, so that's important. We've been living below it. Living below it is bearish, right? So okay, that makes sense if you think back where we've been in the last couple of weeks. And now we got the CT, which has been trending down day over day. And then all of a sudden, Friday, we cut up through this short term, what we call the railroad track. And it's called the railroad track because when it's in one direction or another, it forms a pattern. And when we cut across it, it's just a moving average. But when we cut across it, we cause this inversion. And sure enough, we got it on Friday. So Huss is going to be updating overnight. He usually updates at about 4 a.m. in the morning. He's over across the pond in the UK, and he will post the exact characterization of this, but you're going to see long-term bearish, but it's weakening. We're approaching it, right? And you're going to see short-term bullish, and it's going to be day one. So it's going to be what we call a trigger day. So this is something to pay attention to, right? So we have a trigger day off the bottom. Doesn't mean it's going to continue, right? And we've had plenty of trigger days, and they can fail. But this is pretty solid, at least for one day. This is telling you to get in motion and start looking at long exposure. And if you're short the market, you might want to take some profits, right? So Taylor was talking about this much of the day, and the Discord in general was talking about this on Friday. This should have been no surprise to anybody if you weren't listening or at work and were otherwise occupied. This is a signal that you can actually use to say, okay, what am I going to do? And right now, as I indicated, I would be looking to go increase my long exposure or think about get my shopping lists on the long side ready. And I would also be thinking about what would I need to do to close some of my short positions. All right. So any questions there before we move on? All
The
right.
one thing I noted too on Friday was
Yep. Sorry about that.
we have no idea if this is the turning point in the market, right?
We have no idea. Not from the.
However, what I said is literally every rally, like every new uptrend from downtrend starts with this exact characteristic. Now the reversal may come at the open or it may come intraday. We have no idea. Obviously, we prefer intraday, but at the moment we have the one at the open. And so what I was saying on Friday is all new uptrends start with this character, but this character doesn't always lead to a new uptrend. And so,
Bingo.
just by definition, in a new uptrend, this is your best risk to reward that you can have right now. So that doesn't mean to go full port in, but as Michael likes to say, progressive exposure. So potentially trial balloons could have been taken Friday, or if you want to wait to see some continuation, come Monday. Nothing wrong with that either. Just a bit more conservative, but nonetheless, part of your point, the first part of the turning point that we look for is exactly this, the reversal off the bottom linear day higher, getting the railroad tracks expanding higher, and then getting the filtered tick buying to support it as well.
Yep. Yep. And there's a couple things too, just to add some kind of like, dot the I and cross the T's thing here. You can see a sense of urgency. We call this a linear down over here, right? So back on the 10th, right? So we're ramping down pretty hard. So this is Monday. And the afternoon sold off pretty solidly. For whatever reason. Let's not get into the politics of the world at all, right? Same thing here, a linear down, right? We didn't necessarily have a linear up in the FCT. It was close, but we certainly had a linear up in the unfiltered cumulative tick. In general, this is just telling you there's steady progressive buying. And the reason I point this out is that when you see this, you can start thinking about okay, something's going on here. And this is streamed also for those of you who have TOS, the short-term tick numbers or indicators are valid, right? I mean, they're telling you that slope and the consistency. And Michael Plastic is one of the maintainers of that tool. And I would urge those of you who have got TOS, go ahead and load it. It doesn't look like this. You don't have the ribbon that looks like this because TOS has a limitation. They only go back 30 days, but it gets you oriented, right? It's another way that you can watch and train your eye. And then we talk about this. And like I said, Huss every morning grabs a portion of what we call the ARCX, which is the official model. This is heavily back tested since 2013, characterized day for day. We know all the different states of this thing and we know how it behaves. And you can see it rolled over. It's been in this severe downtrend. No surprises there, of course. And you can see there have been some days, even without having all the other detail that was in the USC, linear down. And you can see this linear up pattern with the crossover. And now we have the proper inversion. This is a bullish signal, right? Bullish trigger day. So to Taylor's point, we don't know if this is going to continue, but it's a good setup. And this is the mentality that we want everybody to, um, to be thinking about. So I think, we'll see, right? I see Baines is saying, Friday was a 90% advanced day. It's a short covering day, right? Everybody was on one side of the boat, and we'll go look at some charts here in a little bit. Um, I don't agree necessarily. There's short covering depending on the amount of shorts. Typically take 1 to 3 days to clear. If it is true short covering, it's not just a day in a flash here. And the reason I say that, Baines, is I want to step back and I want to look at just how negative things were to your comment. I mean, we had been just slamming the downside, puts upon puts upon puts upon puts. It's going to take as the market starts unwinding those, whether they be options market or whether they be short shares, it's going to take a little bit to clear that. And so I would say, and think back to when I know IBD has changed things, but they used to have a follow through day. When was the follow through day? Day 4. There's a reason for that because it actually takes time to clear the book and clear the shorts. So if things are going to materialize, I would look to see a continuation, right? I would look to see a reversal. And then that goes back to, this pattern that you see here, we would want to see the CT continuing up, right? And typically what happens is that you'll see this, over and over and over. Let's see if we can go back and find where it did it back, like maybe here, right? So here's a reversal, midday reversal. It's one of the more powerful reversals. This is on January 13th, right? Intraday reversal where the market steps in, does something, and you can see what happens, how it continues day over day over day. So Baines, to your point, this is buying, right? You're going to see advancing issuances here, completely outpacing the decliners. The CT is a measurement of transactions of the buy side. So we get an uptick when we have a buy transaction, meaning price goes from wherever it is set to the next, meets the ask. And then when it's going down, it's the opposite, right? And tick is wherever it is, typically the midpoint, and it steps down and we generate a down tick where it meets the bid or near bid. So I'm thinking, and you can just see 1 day, 2 day, 3 day, 4 day, and what happens after that. It looks like it continued up pretty strong up into day 5 and 6, and then started to roll over a little bit. And I think we've seen 3 and 4 day, and then once we get up into the ribbon, which represents kind of this aggregation of where buyers and sellers have been from a couple weeks ago, now you're back to kind of breathing a little easier. You're back to parity. I think we'll talk a little bit about this in a second on the transitions. But what I think you'll see is the market will kind of relax a little bit. We'll certainly see vol coming down if this continues, and then that will be also something that we can pay attention to. But I'm getting ahead of myself. Let's just go ahead and get over here. Okay, Rick. Yeah, I don't know why. I think you had R Baines there at one time, but not a big deal. Right. I appreciate it, Rick. All right. So Taylor has put something in the voice channel. It's really good stuff here, right? Market trend model, watch the MTM for broad buying, look for the CTD, indicate that linear up. That's what this is. We cut across the railroad track, higher as well. Bonus is to see a confluence of filter tick buying, and that's what we had on the this shows us a little bit of urgency there. And again, we had the 52-week new high, new lows also stabilizing a little bit. We're going to go over here to a different chart now. I'm going to flip over to the SPXP. So I ran this, I think it was this morning when I fired this thing off. It's not going to change much. It'll have time decay in it. The delta levels will change a little bit, and it might not look exactly like yours. But all in all, remember, nobody gets, not just we, there is no service that anybody at our level, retail level, can subscribe to that's going to give us OI because, frankly, the OCC and Opera have not published them. They don't start publishing those messages until after 4 a.m. Eastern time. We don't receive from our supplier and processor, we don't receive those messages until after 6:30, and usually our processing is completed by 7 a.m. Eastern time. So at 7 a.m. Eastern time, you can load the web app. It will update with OI, and it will update with what the market, how it transacted on Friday. But all of that said, there's some very, very useful information here. So when you turn on the all expiries, which is the SPXP all expiries, you can see all the purple range over here. And that's, to me, that's a real important consideration. Because what has happened here is that you can see we've got a transition, GEX transition that starts right here, and you can see where spot price is. So I think that's one thing to take a look at. Another thing, and I put it in the notes on Friday, was so below, just to get everybody oriented, we do something different here. I know most of you are aware of this, but I want to make sure that that we're all tracking. We separate the surface, the option surface, into left-hand plane and right-hand plane. And part of this is leftover. Well, not leftover. It's part of it. When you look at the 3D charts that we have, you see a left-hand plane of spikes and dips, and you see the right-hand plane. And that was the genesis of it. Same principle here, though. So left-hand plane is this area below the gold line. That's where price is at the gold line. And so everything here is represented by an in-the-money call and an out-of-the-money put. And the vice versa. The right-hand plane is represented by out-of-the-money calls and in-the-money puts. Now, that's important because moneyness matters, right? And so when we take a look, there's this net OI column, which we're going to come back to. And then we have what are the price sensitive Greeks, right? So gamma is price sensitive. So as this yellow line moves up and down, that matters, right? It's going to change the distribution of gamma that you see in the structure. And delta is calculated as a function of moneyness, right? And so remember, we have decaying calls above the line in the right-hand plane, and we have in the money calls, or in the money puts, excuse me, that are in the right-hand plane, and the vice versa for here. So the deltas that you see here often are dominated by the in the money puts, especially if there's a lot of them there. If we're not at new all-time highs, there's been a lot of speculation. Remember, we've just pulled down through the structure, right? We just dropped through it. People were buying puts that at the time were out of the money. Now they're in the money because price has continued to fall through the structure. Why is that a big deal here? Well, that turns because those deltas are minus 50, minus 60, minus 70, all the way to minus 100. They are dominant. And when you take all of the contracts, you multiply them by what their deltas are, which are big numbers over minus 50, and then you multiply that by 100 because we notionalize it to shares in the net delta column, you get these values that are fairly large and red. The red tells you it's put dominated. The green tells you that it's call dominated. For whatever reason, there's enough calls, even though they're out of the money, there's enough calls with delta that are causing this, and this is all strikes or all tenors here, right? All strikes here. So basically we sum all of those individually and you get just this little island in a sea of red. That's important. We're still right-hand plane put dominated. It's important. Same analysis on the left-hand side, down below spot price here. Why this is important is that all week, if you were following the SPX channel, and I had it open, I think Monday, Tuesday, Wednesday for everybody, it didn't matter on your membership level. Part of that was because we were in unprecedented structures, and I wanted everyone to be able to learn and see what that is. This was all red at some point in the week. With all the expiries turned on, everything here was red. Right now, that's a big deal. And what that is telling you is that there's a tremendous amount of put speculation going on, even though you have in the money calls. Now, think about that. The in the money calls have a delta of 50, 60, 70, all the way up to 100 positive. They were being offset by out of the money puts, which have deltas of minus 40, minus 30, minus 20, minus 10. So it takes for a given, just due to put call parity at the same expiry, same strike, a 60 delta will require 20 deltas to offset it, right? So you're basically, when you look at that, they all have to sum in their overall deltas. Why is that an important conversation? When you see all of this here red, the out of the money puts are winning the battle, right? That's that negative gamma or put dominated gamma that we're seeing. And remember, we do something a little different than a lot of places. We fully understand, don't DM me. We fully understand that long options have positive gamma and that short options have negative gamma, or yeah, short options have negative gamma. We understand that, but we do some things in the back office so that we can create what are called transitions. And we keep track of all of the mathematics. So when I say negative gamma, I'm generally, from our GammaEdge perspective, I'm talking about put dominated gamma. So you can see we have negative gamma here. This is basically saying there's a lot of put control that's going on here. And the deltas, relative to where we were last week, the deltas are starting to turn green. So let me pause and check everyone's, tracking here. What is this telling us? What is this change from solid red on the net deltas, which are spot price sensitive, all expiries? Now they're starting to turn green. Anybody? Put it in chat or speak up. Oh, don't be bashful. Come on, folks. ITM calls are coming through, right? The downside fall is slowing. Terry, Rick, you guys got it, right? You're absolutely right. This is one of the key things that we want to see. It's necessary to start. Remember, there's a fear and there's a greed component here, right? Yeah, OTM puts are closing, they're vaporizing, or they're expiring, right? They're being allowed to kind of vaporize. The takeaway for all of us here, though, this is an important thing. Because the markets follow this more or less sine wave or this oscillation back and forth, and if you've paid attention to the Vol D tool, you will see slice over slice over slice. The speculation is always the out of the money options. Now, there might be some 50 delta, 60 delta, 70 delta in there, but people don't buy 90 and 100 delta options to speculate because it's like buying stock. Why would you do that? There's no convexity. There's no gamma. So what we see is that out of the money speculation. And when we see that out of the money speculation, that drives greed to either direction. So when we see puts being open, we're adding negative delta to the table. When we see those puts being closed, we're taking that negative delta off the table. Well, guess what? If price is going to hover around up here, those puts are out of the money. That's fear. Those put holders are not going to realize their money except for what they have in term. They have no intrinsic value. They have nothing except extrinsic value, which is time value. That's it, right? And implied volatility. If they're long those options, and oh, by the way, we're in a high vol market, what happens if we start to rally? Vol comes in. If you're long an option and you bought it when vol was high, you're going to get crushed, right? That's going to be part of your value, of your extrinsic value, and it's going to go away. So not only are you going to get a time decay, which is going to remove value, you're going to get volatility decay, which is going to take money away from you. That's fear. So you close those. When you close those, we start to see the green come through. So this is another major component of watching for a turn, right? Watch the SPX, watch your favorite large liquid symbols, watch how they were, and then watch what happens as we start going through time. Now, this is, as Taylor was saying about the CT, this is necessary, but it's not sufficient. What's the sufficiency? Before I go there, anybody want to venture a guess what the sufficiency, what else do we need on this view that you see right here? What else do we want to see in order to get moving? Anybody?
OTM calls coming in the left-hand plane.
Sir Haney, you get the magic prize. Yes, sir. OTM calls. Now, we don't see it in this view yet, right? There's not enough dominance here to basically show up. But remember, the in the money puts normally rule the roost over here. So just looking at the net delta column may not give you everything you want to know. So for the folks who've been here for a while, what's another way? I'm not going to change the screens. I'm going to keep this screen up. I'm not going to change any expiries. What's another way we can start looking to see for the presence of out of the money call speculation? Anybody? Rick's got it right here. Calls, OTM calls have to start predominating. How do we see that? Value. No, I mean, you're right, check nav. We can see it with value, vol M, and you're absolutely right. The net OI RHP turns green. Bingo. Rick just nailed it. Rick's got it right there. So you can see in this view, we've got a lot of red still above us. And net OI is established at the beginning of the day. You guys may have heard me say, I don't refresh this screen 50,000 times a day. There's no need to. I work on the net OI and what's the structure of the net OI. Actually, I don't really care about the net delta as much as I care about the net OI because the net OI tells me who's in control of the strike when we get there. And that's not necessarily going to change. It's going to be influenced by the intraday volumetrics, but it does. So what happens is as calls go in, out of the money speculation, as the market starts to get confidence that we're going to move up, they start speculating. And these numbers will start growing. These are the out of the money calls. And these people, knowing that price is starting to come up, they're the in the money puts. In the money puts. They're over a 50 delta, minus 50 delta, right? So they're minus 60, minus 70. But as price comes up, what happens to their negative deltas? Anybody? They start to lose them. They start to get fearful. Right. The negative deltas go down. They get less negative, more positive. That too moves the book longer, makes the dealer's book shorter. All things equal, we start getting pressure the other direction, right? That's why we have sometimes we have these and the reversals. So we get a kind of a combination of things. You get a decrease in the net OI on the put side. You get an increase in the call OI on the call side, And then that turns the net OI in favor of more green. And so I want to see personally, and we're going to go to another tool here in a second. I want to see personally, just looking at this, what's the dominance of green? Now, we draw delta exposure, right? We do this every morning for you. And the minus trans level of GEX, GEX, gamma exposure, which is determined in this column, is really easy to find. It's where it's that strike at which it and all the strikes below it are put dominated, right? So that's the definition of N trans for gamma, for GEX. For the calls, or excuse me, for the DEX, for delta, it's all based on the net OI. And in this particular chart that I have up on the screen right now, DEX isn't, or GEX isn't, so GEX is 56.55 sitting right there. But you can see I've got a couple strikes higher where I've got a strike and all the strikes below it are negative. Negative trans for DEX is sitting right here at 56.65 using Friday morning's data. And it's going to remain in that spot, especially with all these expiries turned on. It's going to remain in that spot because these are not changing throughout the day. Now, in a single expiry, and this is a little more advanced and we can handle that at a different time, transition will evolve, especially if it's really heavily dominated on one side or another. But you can look here and you can see I don't have a lot of green here. So there probably isn't going to be a plus trans until we get up to a level. And you could argue about what about these levels? Does your eye start locking in on this transition area? And the answer to that is yes. We get more greens as we appear here. We can talk about this later, but what I want everyone to realize is that we've got effectively the net OI indicating whether or not we've got a lot of calls going in. And so if you snapshot this, and I put it in the SPX game plan every morning, you have a reference point and you can start seeing just from this alone, is there enough turning that is going on in the overall structure? So left-hand plane, what are we looking for? The dry up. Right-hand plane, from this view, what are we looking for? We're looking to see more calls go in, and then we can go down to the single expiry and start analyzing the single expiry. Step 6 of the framework, I'm going to jump ahead just a little bit in the SPX framework every morning. Step 6 is to understand the delta balance tool. The delta balance tool is exactly what we're talking about right now. I want to bring this up and just highlight something here just so that we can, all be on the same page here. So let me go on down to the SPX channel. This stuff auto prints all the time. And I'm going to open up the SPX delta balance, and here it is. All right. We're going to look at a few other ones here, but because I made some comments that it looked like Friday was going to be a rally day, but I want you to see, and remember, this is from this morning's run. We just take an archive in this particular case, it was at 10:30 a.m. Eastern time. So again, this is still using the OI balances of Friday morning, but it's using all of the Greek calculations as of 10:29 this morning, Sunday morning, right? So it updates everything, calculates everything freshly. What are we seeing here? So let's just kind of make sure that we're all tracking here, because I think the information in this can be very, very useful as you're looking forward. So you obviously have the price series, and I've just isolated the LHP, the left-hand plane. Remember, that's the area below that we're looking at here, right? So when I isolate just that, all I did is just click down here in the legend. You can turn things on and off just by clicking down there in the legend. You can see that we moved across the 0 here. And so why that's important is that we're starting to see a little more call domination appear in the right-hand plane. Now, this is by expiry. This is a little different than this view. This view turns everything on and aggregates it. The Delta balance looks at every individual expiry. Think of it as a silo, and it's literally just, it doesn't aggregate, it doesn't mix anything together. You're looking at how the market is viewed every independent day. That is important because the market has to follow a certain path to get where it's going. It has to navigate the structure. So what this is showing us is that we're showing a little more for Friday, and based on the price action, we have more calls, more deltas, and especially as price comes up, we're capturing more of those positive deltas and we're rejecting the negative deltas as price moves up. So this is a completely consistent reading that we would expect to have. Let's go take a look at the left-hand plane. Let me turn off the right-hand plane. It auto-scaled here. This is basically coming up off extremely low levels. -1 is bearish, fully bearish. And you can see we're now starting to come up. As price moves up, think about this though. This is showing the left-hand plane below us. It's still very much put controlled because we're below zero, but it's getting less put controlled. And again, this makes sense as price comes up, because as price comes up, we are effectively rejecting some of the in the money puts. We're making them out of the money as price moves up. And now we're turning out of the money calls, any that were there, into the money, at least through the moneyness level of the price, right? So it makes sense that we would start to see this starting to come up too. And then watching this tomorrow after the OI updates in the morning before the market opens, what kind of confirmation do we have there? So when we add these together, you've got a fairly compelling story, not only due to price, but you've got a little bit of a relaxation, and then the kind of dotting the I's and crossing the T's will be in the morning when we get our morning updates. I'm going to turn on the delta balance, and you can see the delta balance is also starting to come off of those extremely. Now, this is an oscillator. It wants to snap to +1 up here, and that's why it rails, and it wants to snap down here to -1. It's coming up off of -1. So independent of what the right-hand plane and the left-hand plane are doing, it's basically telling us, I don't have enough to snap all the way to the left-hand side or to the put side here. So this is telling us that the SPY, or excuse me, the SPX, is starting to turn a little bit. I know this has taken about 15 minutes of explanation, but I want to make sure everyone's dotting the I's and crossing the T's as they look at the web app tool and as they look at the delta balance tool, right? Now, let's look out. This is Monday, the 18th, right? Tuesday, or actually this is the 18th right here at the end of these things. Today's the 16th. Come on, there we are. I can't hover on it. 14. 17 would be tomorrow. 18 is going to be Tuesday. By the way, VIX expires Tuesday just to do some funky things on because of Good Friday and stuff. At least I think that's what it was. Let's see, the 19th, 20th, and then boom. And you can see we're getting this improvement. So there's progressively silo over silo over silo into next week. There's progressively less bearishness. This is the first. Go back to the delta balances that we've had each day. I've run them in pre-market charts every day. You can go study them. You can see how the progression has worked out, and it's actually starting to work out pretty well. Let me go over to the SPY just as a reference point. This is interesting. This actually existed in the pre-market. I didn't pull up the pre-market chart. This is the one that actually printed today, but we talked about this Friday morning before the open, that the Qs, the SPY, I think IWM and the Dow Diamonds had moved into the right-hand plane above the zero, all indicated that for Friday's expiry, they were all moving positive, right? So the puts had closed down into Friday's expiry, and you can see for the DIA, which is a weekly expiry, that it was actually projecting forward to. The SPY is a daily. So we've got Friday, we've got Monday, Tuesday, and Wednesday, and you can see that it is all bullish too. So we have now a confluence of things from the MTM. We've got the beginnings of dry up in the SPX PM on the left-hand plane. We've got the delta balance for the SPX which is showing us starting to improve. And then we've got the SPY. I can go down to the Qs and do the same thing. It's probably going to show us the same thing. And it does. It's not going to make a liar out of me. Boom, there's the Qs. Let's go down. All of these are in the automated channels, by the way. They're all available to you. You can go look at them. So we've got this for IWM. Monday, Wednesday, Friday expiries there, and you can see a little bit of a dip into middle next week. Small caps might get hit. Remember, we got Jay Powell talking during the week. That could be an interest rate thing. Maybe that's kind of pointing to this. I have no clue. This catches my eye. This is the green line. This is effectively the right hand plane, and it's back down below zero into midweek. So positioning for IWM in the middle of the week is weaker as we sit from Friday's perspective. Okay, so everyone just be aware of that. Let's go look at the Dow while we're here, since I've already got these charts going. And we'll just dot the I's and cross the T's, and then we're going to go look at the VIX. So here's the Dow. And you can see how the Dow is now starting to take off. The Dow is a Friday only expiry, the DIA. So Friday to Friday to Friday. So as I look out here, you can see I'm on April 4th, all the way out here on this star. This one is March 31st, March 28th. And we look here, March 21st. Right. So just be aware you're looking at a much different time frame with the weeklies with the DIA. Finally, let's go to the VIX. Again, making sure you understand the delta balance of the left-hand plane and the right-hand plane. So the VIX way back here signaled in unison, things were starting to look pretty bearish from the market perspective, bullish from the VIX's perspective. And sure enough, we moved from levels that were down here in, areas we haven't seen in a while, 15, all the way on up. And you can see delta balance railed. We've had a little bit of noise back and forth as market positioning changes day over day, et cetera, but it is what it is. Remember, the VIX is a weekly, but it's not a Friday settlement before the open. So last trading day is normally a Tuesday. In this particular case, though, it expires on the 18th, which is a Tuesday settlement. So tomorrow will be the only day of this week that this contract is going to settle. Why that's important? You don't want to get caught flat-footed thinking, hey, this is going to go into Tuesday and you're going to be able to get your trade off, because it will settle at the open of whatever the VIX values are. It's been coming down. And look at this, the right-hand plane, that's the call side, the out-of-the-money call side, is now moving negative. The calls are drying up in the VIX. They have just transitioned down. So we're going to take a look at that tomorrow when it updates, but make a mental note. Also look, we're coming off that rail of call dominance with the delta balance. It's been one for several weeks. Now we're coming off of that. You can see, though, the red line is remaining fairly constant. What's that telling us? It's still very much call dominated down in the left-hand plane, because the VIX values are so high. As the VIX values start coming down, we'll start to see, most likely, I would expect to see the red line coming down over a function of time. Now, looking out week over week, you can see what's happening here. We do have some vols still priced in. That's what the green line being up here and not down here means, right? So this is basically saying we're not out of the woods yet. At this VIX level, the market is still pricing in a lot of calls beyond the settlement date, which is set right here on the 18th. So the 19th, the 20th, the 21st are still all pointing to be fairly call dominated, bullish for the VIX, bearish for the market. So it hasn't caught up yet. All right. So that's a warning sign. So we've been talking about, we've had all this bullishness. We're starting to see things. This is why we're early, right? This particular scenario, we're literally in day one. We haven't seen the short covering. We haven't seen the confluence of everything. We're starting to see it. And so if you want to dip your toes in, absolutely dip your toes in. But don't lose sight that this is not a guarantee that this thing is going to rally, not based on this data, not yet, right? Once we see the VIX come down below zero on all accounts here, and all these things start to drop down, then we'll have confidence vol is coming out. It's when we start setting up for a Vanna rally. It's where we start setting up for more calls going in out of the money. And the rest, they say, will be history. We'll probably recover 5,900 and 6,000 and just keep on running. Who knows? All right. I am going to pause there. That's a lot of talking. Hopefully, Mr. T, I didn't take your thunder away. Anybody? Questions, comments, concerns? Was this clear? Was this helpful? Tom's looking down at us. Tom, what are you doing? Can't hear you, Tom.
Thank you. That was great. I appreciate it.
Oh, we're not done yet, Tom. We're just getting started.
Okay, cool.
Yeah, Jane, and I'm summarizing this as well in the voice channel chat. We got the framework. So just so you know.
Yeah, and CheckNav just posted the VIX expiration for 2025s there. Yeah, there we go. Yeah, Good Friday holiday on 18 April. Okay. I guess they scooted it just because of the calculations or something. I'm not sure of all the details of why they felt they had to advance it by one day for I don't know. I'll look into it just for general knowledge. All right, so option market structure up above where CheckNav posted. LHP, we covered that. The above applies to the P's, the A's, can also apply SPY, Qs, DIA, even IWM to an extent. For the VIX, use DBH. Absolutely, I think that works well. I just want to caution everyone. The VIX, using our tools for the VIX, I think is wonderful. And obviously I do it, I post it, I talk about it. Where I don't stress enough, and perhaps I should, to suggest that the VIX reacts in the same dealer options market and that moves the VIX around and all that. We don't believe that. At least I don't believe that. I can't speak for others, but
Repeat that again, Paul.
so one of the presumptions that we have is that when you use our tools, that we've got a dealer response on the other side of the table. So like, for instance, we're talking about as price moves up the chain here, we're effectively grabbing more out of the money calls and rejecting in the money. And that makes our book longer, makes the dealer's book shorter. And then that moves price even more as they buy to hedge flat. The VIX is not that animal, right? The VIX is actually, there's probably some futures work that's going on in there, and it does move a little bit in the futures market and changes, the curve and the VRP that is realized between where the VIX curve is versus where the cash VIX is. But to say that there is a gamma delta response, well, there's a gamma response, of course, from the options VIX options market, but to say there's a dealer response due to this interaction that's going to move VIX around just because of the VIX options market is not a correct statement. So I think you can use our tools. This was just a reminder to everyone. You can use our tools to look at the VIX, but I would not presume that the VIX itself is under this, like the SPX is, right? We can show, especially with Vol M and Vol D, we can show almost direct correlations that when options are opening and closing, it moves the SPX price. The VIX is a different animal and doesn't behave that way. So while you can use DBH, and I'm going to your comment here that you have in number 1 there, Taylor, you can use DBH to look at VIX. Always keep in the back of your mind, it's just showing you a snapshot of what the delta balance is, but don't get caught up that, oh, if I see all this volume going in on the VIX, that I'm going to get some sort of a response. Here, let me make this really, really clear to you. See if I can grab it here. I'm just going to go over and grab a chart. Let's just do it on this one here. Hang on a second. Let me just grab a chart. I'm going to grab the VIX real quick here, and you're going to see just what it looks like. If you haven't looked at it in the web app, that took a long time. All right, so when I'm streaming, things slow down to a little bit slower here. So here I'm going to call up the VIX. All expiries will be the default view, and I just want to show you how green it is in the environment that. So let's just take a look here. You can see a lot of green here and some pretty serious calls that are positioned here, right? This does not necessarily suggest that we're going to get that huge movement in the VIX because all of a sudden VIX futures or VIX cash starts moving around. Remember, the VIX is a measure of the 23 to 37 day forward view of the SPX at the money. And that's a different animal. And so really, the SPX dog or SPX tail is wagging the VIX dog. But you can use our tools certainly to look at it and get the distributions and see where the option market for the VIX is definitely positioned. Because certainly you want to go where there's liquidity, and going on to the big numbers can be a big thing there. All right. We handled number 2 that you've got there. Let's see, same for RHP. Look for spot price close above and hold transition zones as identified within the web app dashboard. Yeah, so the key thing to, let's just take a look here. I'm going to grab a couple of these. So IWM, very tight transition, very tight gamma that's associated in there. Let's just take a look for tomorrow. A little wider transition. So here's the gamma negative gex here, positive gex. These are the 2 strikes that are the largest within the IWM structure for tomorrow's expiry. And you can see that this strike and all strikes below to the limit that are shown right here is your minus trans, and the same thing for your positive trans. It's this strike, and they just happen to be coincident that plus gex and this strike here are the strikes that are positive. You could argue that the delta is also going to overlay this, and in this particular case, it's absolutely coincident. So you've got the negative right here, and all the strikes below are negative. You've got the positive right here, and all the strikes above are positive. Therefore, this is also the DEX transition. What we like to see as time goes on, we like to see that narrowing. That means there's less and less uncertainty as we go forward in time, right? The range is getting more and more defined. The bulls and the bears are becoming more focused and more concentrated. When we have this and you've got this huge transition range, it's because we've dropped down so fast that the market hasn't caught up in speculation. We haven't populated out of the money calls enough to start bringing things down. So the expectation is this. Not only are we going to move up in price if we do move up, but we're going to start seeing the backfilling of calls into this area, turning this area green. That will drop plus trans down, because right now it's if we were to draw DEX, I would draw it, say, from right here at 58.35. We'll start filling in these red ones here, and then all of a sudden DEX plus trans will come on down. Ideally, if you go back, I don't know, maybe middle of February, right in the middle of January, we had a nice run there. The DEX and the GEX transitions were super narrow, and that meant we had a well-defined market, right? So we knew what was happening, and we were trading above it most of the instance, right? Or right at transition to above it. That's exactly what we want for the bull case. That's where you want to step a little more on the long deltas and start moving things forward to start aggressively pushing higher. All right. Let's see what else you got here. I think that handles 1, 2, and 3 there pretty well there. Taylor, what do you say? Anything to add?
No. No. Nope. No, the only thing I was just going to say is It's sequencing of events, right? Like we're gonna see the 0DT transition zones taken out and then see the full complex taken out. And the character of when we see kind of a broad sustained rally, it's important that we see the full transition zones taken out, right? Because day to day, 0DT is gonna do what it's gonna do, right? But from a broader point of view, if we want to see, a multi-week rally, we want to see that transition zone shrink to be very tight. You want to see the call speculation on the full complex, and then you want to see the taking out of the transition zones to the upside. Do I have that right?
Yes.
Okay, cool. So is everyone tracking to what we've been going on so far? It's general framework, right? Market trend model. Want to see buying starting to step in terms of market structure. You want to see the puts leaving. You want to see the calls come in. And then using, delta balance to kind of look out in the future to see what that looks like. And then using the web app and the visualization of the structure to understand kind of where those key levels are at.
Yeah. Cool. So turning points. He just covered them. I'm pointing to him. He's to my right on my screen here. He just covered them, right? So I think, in wrapping up, this is a beginning, and for those of you who are thinking back to college 101 here, necessary but not sufficient, right? It's day one. It's step one. Certainly, every trade begins with a 0 DTE. So we have a trigger day from Friday. Keep your head on a swivel. Doesn't mean Monday and Tuesday. In fact, let's go take a look at futures to see what they're doing. They're down. All right. So it doesn't necessarily mean badness. VIX isn't trading, but VIX futures are kind of holding their own. They're at 20.87 right now. So we'll just see where they go. But in kind of the big picture of things, this is a good first step, right? And we've got some good things. We need to see more of it, right? So that's kind of the first big summary item there. All of this will come easier the more you start looking at stuff. We want to see more green below the line. That's the left-hand plane, right? We want to see that basically the puts, these numbers go down and get smaller and smaller as the speculation dries up. We also want to see the calls really start to come in there. And there's two ways to do it. You can do it right from this screen and just kind of watching the colors in the net OI column. That's one way. And then the other way, of course, is looking at the delta balance. Let's see where my delta balance charts go. Looks like I may have closed that. Did I? No, here we go. Here are the delta balance charts. And just keep an eye. I personally like to look at the LHP almost exclusively for a lead because that's the call out of the money side of the equation. That's the other part of it. That's another when these are moving up, that's necessary, but you need really everything. You need the calls going in, and this is the VIX. Let's pull one that's up. That's going to move up here. You need basically the behavior, and not this. Let's pick another one here that looks good. That was the Qs. Let's take a look at the SPY. Yeah, here we go. Above zero, we want the calls to be indicated in and remaining in for successive days. That gives us confidence that the market is starting to position more on the call side. That's the sufficient component. Just moving up and maybe one of these isn't enough. We want to see all of these delta balance things start to show the call dominance. And right now, I would say for the SPY, we're there. The asterisk is tomorrow morning. Let's just make sure you can do your plans tonight. I do all my plans this weekend, as you guys know. And then I will update them in the morning. It's a very quick update just to make sure that nothing is invalidated when we get the updates. So, all right. Is there any other questions here? Let me see. Thumbs up in the chat for there. Anything? All right, there's a CBOE calendar. That's good. Mr. T, anything to add?
And
Anybody else?
I think we're good. Now, just
Yeah.
one clarification real quick. Left-hand plane, we're talking about below spot price.
Yep,
That can only be in the money calls or out of the money puts.
correct.
And then right-hand plane, above spot price, those can either be out of the money calls or in the money puts.
All you can have,
Yes, correct.
period.
Those only two states. You can't flip-flop, all that good stuff. So
Yep. Yep. And like I said, the genesis of that, in case folks are, wanting to know, when you look at the planes, right? So here's the SPXP. When you look at the charts, you're looking at the left-hand plane in the net and then the right-hand plane. So we've got strikes, and we've got time, and then you got magnitude. And this kind of gives you a sense of days, where are the big, what we call icebergs. But the name of left-hand plane, right-hand plane, the genesis of that was from this. So, and this is the charm plot. So this is just telling you where there are some big strikes out there already for the SPX, right? So knowing where those are can be very useful. All right. Thanks, everyone. Oh, I see Rick's got to say, when you look at all the SPX, it shows put dominated. Does that give you a general direction of the market for the year? No. The SPXP, it's a great question, right? So I don't want to sound like I'm throwing you out there, Rick. The SPXP is an incredibly short-term instrument. Let me prove that to you. You don't need me to tell you that, right? So I turn everything on. I got 3.5 million contracts, right? By just reference, over in the SPXAs, which are the monthlies, right? And this Friday is the monthly settlement, right? I got 15.7 million, right? So lots more over in the A's in structure. Now, this 3.5 is comprised of all of these individual expires, right? It's the aggregate. Let's just go look at what we're looking at, 180,000, right? And then you can see the number. Tuesday, Thursdays are generally much weaker in the SPX. So Monday, Wednesday, Friday, and typically it's Monday. It's Friday is the biggest. Monday's next. Wednesday falls in, and then Tuesday, Thursday is a coin toss, depending on if Mr. IC Man is back on the table or not, right? But if we take a look at, say, the 18th, 113,000. We go to Wednesday, 100,000. 69,000 for Thursday, the day before the monthly. 1 week out, because this is Friday morning's data. 1 week out, we only have 69,000 contracts for a Thursday SPX PM contract expiry, right? So you can't say this is a year out at all. First of all, this thing turns over. The SPX PM turns over almost daily, weekly, whatever the case may be. Very, very short duration. If you want to get a sense of how the market is positioned, go to the A's. This is the structure. The A's form the overall structure of the SPX market. It's why we separate them. We're the only company to do so. The reason is they trade completely different, right? So when you start looking down here and you see you got 15 million, how many are on? 4.6 are due to settle out Friday morning at the open. The settlement symbol is SET. You can follow it. You can go look it up at CBOE. Let's go out to April. For some reason, my system is not responding, so give it a second here. Again, when I'm streaming it, plus I have TradeStation running, and it looks like it's just all the futures are updating on another screen. I usually shut some things down, and I did not do that before we started here tonight. If you go out to April, anytime here, Mr. Machine, I may not be able to do this. Looks like my machine may have locked up. I don't know. Can you guys still hear me?
Yeah.
Okay.
I don't think you have enough tabs open.
Yeah, no kidding. Yeah, I think I've crashed my browser. So the point is, Rick, when you want to, oh, there we go. Yeah, I just saw it flash, right? So 1.3 million for April, and we look at May, 782. You get a sense of where things are. But remember, there's a roll, and Tom Haney posted the progress of the roll. It's a CBOE tool, I think, or CME tool that's out there. And all you have to do is create an account with CME, and I think you can go download the tool, and it tells you the progress of the roll. Why is that important? The money from this week has to go somewhere, and they don't always just roll it out 1 month. It could be this, since this is the quarterly expiry, right? At the end of the month is the quarterly expiry, but this is the third month. They're likely roll it out to June monthly, right? So you can go out to the June monthly and start watching this number. And sure enough, 2.6 or 2.8, excuse me, million contracts already. That's from Friday's perspective. So you can start watching the numbers and start seeing where did that money go, and et cetera, et cetera. That'll give you a sense of where things are. But as I step through this, I didn't call it out, Rick, but I don't know if you notice, it's still very red. The market has positioned for the downside, and it's going to have to get resolved one way or the other. So you're welcome. All right. Have a great night, everyone. We'll see you bright and early in
Whoa,
the morning.
Paul, you
Oh,
gotta go.
I gotta go. Yeah.
Okay. Nope, all good. We'll hit on a couple other tools next time then.
All right.
But guys, yeah, Paul, you can leave. I'll just hit on a couple other ones real quick.
Yep. You go for it.
Yep, all good.
Thanks,
All
bud.
right, so guys, the other ones that we look for too that aren't necessarily connected to SPX is, using our scans, specifically looking at call dominated stocks versus put dominated stocks. So kind of from a sentiment point of view, we want to start to see that call speculation come back into those names. All right, so cool. Paul's gone. They didn't kick us out. So yeah, right, that makes sense. So we start to see that expansion they call dominated stocks. So not only just SPX, but kind of the Mag 7 or the bellwether stocks start to see that coming as well. One thing that we do there is, so you can see this graphically, is, on the single stock game plan, something I generally post, but I didn't post is, so this is just a time series of our call dominated versus put dominated scans. And so generally, call dominated is well above put dominated stocks right now. They're both quite small. Let me go try and find an example of where. Yeah, so like back here, you can see it's like 120 to like 20. So this is kind of a lot more what we see in bullish conditions. Just most stocks are call dominated. So that's an important thing to look at. Another important thing that we look at is the GEX ratio. So right, the GEX ratio is just simply taking all call gamma in the complex relative to all put gamma in the complex. Here's that $GR. Obviously, we want to see this trending higher. It's super low right now, which again, the structure was put dominated. You can see that in the web app. So we want to see that starting to trend up, starting to move higher. That again is evidencing that either puts are being closed and or calls are entering the complex. And then we also like to look at the true zeros. Paul has been talking a lot about this lately. Separate the true zeros again from the SPXP to the SPXA, just for the reasons we just talked about, because they do kind of represent different types of traders in the structure. And so just understanding kind of what the trend of that is doing. Are they trending lower? Are they trending higher? These are spot price insensitive. Paul, frankly, he's going to have to give you a better explanation of what those are specifically calculating, but those are also critical to pay attention to. We want to see those trending higher with spot price moving higher above those as well. I'm trying to find, yeah, so here's SPXA right now. Generally, we're trending above it. Let me see if I can find a better TZH SPXA 150. So yeah, generally we see both of those trending higher right now. There's obviously been a meltdown. No, they're good. that we looked at last time was SPXA. What do you do, like 500, something like that? So this will give you the last 500 trading days of SPXA. Here you can see here, look, right? Generally, we're trending higher above all these true zeros. Those times where we've had, a material breach, or we've really never breached below the true delta zero. Those are generally offered good buying opportunities, but right now it's pretty material breach there. So again, those are good things to keep an eye on. And then, right, kind of the progression is SPXP generally improves quicker than SPXA just because of the nature of traders in that. SPXP is generally focused more short term. SPXA is, the monthly institutional. So just let's recap real quick. And if you guys have any other questions, let me know. But I have this. I'll turn this into a newsletter article so we all have that. So, right, just kind of our turning point indicators. The first one doesn't have to start with market trend model, but this is generally where we see it manifest first through is we have what screen do you guys see right now? Sorry, I got multiple. I don't know if you guys see the Discord or if you see the market trend model.
Discord.
Okay, cool. Okay, yeah. So step one, market trend model. Want to see that reversal off the bottom. Cumulative tick trending higher, get the railroad tracks or the short-term moving average trending higher as well. Obviously, you want to see continuation in the coming days, which is critical for that railroad tracks to form. You also want to see, support of the filter tick itself. Ideally, we have linear up days there as well. You can see this whole last week was linear down days with the selling, so we want to see that buying kick in. Next, looking at option market structure itself, using DBH, using the web app command or web app dashboard, we want to see puts drying up in the left-hand plane and those in the money call holders starting to come back in. And then what you want to see in the right-hand plane is the out of money call speculator starting to come in as well up there. Yeah, and then remember SPXP, SPXA is kind of what we're primarily focused on there, but you can also use SPY, QQQ, and the Dows, and then VIX, right? We can look for that as well. It's vice versa with the VIX of what we look for there. You're wanting to see slopes lower. Then just to note, right, the tools to observe the VIX. Sorry, use tools to observe the VIX, but the VIX is not necessarily subject to the same dealer market maker dynamics that SPX is subject to. Right, at the end of the day, VIX is a math equation, looks at 30-day forward volatility expectations, but you can infer kind of what's happening in the VIX of what could transpire in the SPX. So that's why it's important. All right, do the same there. Yeah, transition zones, we want to see spot price cross above, be on the right side of the transition zones for the full complex. And then, right, just kind of leverage the scans, even if you're not a kind of a swing trader, just kind of from even an intraday perspective, you're just wanting to kind of understand if conditions are getting more bullish, more bearish than other tools, right? Leverage the true zeros and leverage the GEX ratio. And these bottom three are more kind of specific to sentiment and kind of how the market is improving as a whole. And then, these really focus on the option structure of SPX itself.